Good morning, welcome to Nifty prediction. My name is Narendran. To join my WhatsApp group, I'm charging 500 rupees per month. You will get advanced prediction details as well as calls in the group. And if you like my video and if you want to support my research, you can donate me using this Google Pay and Phone Pay and Paytm. Let's go to the review for Friday market and then what are the calls given in the group. Nifty ended up in the negative 14,529.15, 568.20 points in the negative, 3.76% in the negative, opened around 14,888.60, which is well below the previous closing, and high is around 14,919.45, low and around 14,467.75. And as we spoke earlier about our downside target, which pending 14,569 got hit on Friday. Okay, you can see it was one side, it has target got it, but still one more target it has opened up. I'll let you know. And we have the pending target, which is 15,262.13 on the positive side, and one more lower set target which opened on Friday, because this low is also not matched with the data. Let's go to the data and how it has matched in my video, in my prediction. This is the Friday data. We will review how it has matched in our data and why it has went down on and on for Monday, Friday market. It has went lower. We know the basic target of bearish market, which anything opens below the volatile level. I have told so many times. The data is showing bullish because of all four indications are shown in the positive, but still pre-open is not supported, because whenever four indications are one side, then the pre-market must have to be at least 1 point in the that particular side which the data is showing. So as per this data, it is all bullish side, because all indications are shown positive only, but we have given the negative call on Thursday itself holding, because we know that the market might have chances to go on it on the downside, because we have the target on Thursday. The market has closed in the range of 15,100 odd points. You see the only difference of 3 points, so which means we have the positive target, which is 15,262, the difference of 160 points only roughly, and negative side target, which is 14,569, which is almost 550 points roughly. So the points in the negative side, which is huge comparing with the positive sides. That is the reason we holded the put option instead of the call option, because if the market is going up and reaching this target also, we can average that put option. That is the idea. And luckily on Friday the market has started on the gap down, and it went on and got hit our target as well. So it is a good day for us on Friday, and I'll show you why it has not recovered. Whenever we have the hint of the market is open below this particular level of negative, volatile 2, then it is a extreme bearish market with a stop loss of overall average. We saw so many times, but it has gapped down as well. And one more hint which we given is, anything the volatile level comes inside the positive, normally volatile level 2 comes always in the negative side, not in the positive side. So that is also one more hint that we holded that put option, because we took this data well in advance before the market. So that is the reason we had holding those in. And those kind of scenarios we can make some money if the levels are working out. So exactly the market has opened below the negative average, 14,950. So it is below the negative average and not even broken the negative average. See, is not able to broken that, so it is, the trend is on the negative side only. When the market needs to recover means it has to break this particular negative average level, and then only it has a chance to recover, but not able to break that particular level. That is the one point the market is falling down heavily. And one more point which the market has opened up for the next level, because the low is not matched with the data. It is not matched with the 3 point or 10 point stop loss range, so which means it is open up the next target level, which is 14,350.13. so the next target still we are having 14,350.03 is the next target for the downside, and we still have the pending target 15,262.13 is have to fulfill. We may not know how long it will take to fulfill that 15,262.13, so we need to play much more cautiously, because the gap between the points are huge. So let's go to the calls. What are the calls which we given in our group? We already asked to bought this particular uh, put option, which is 15th of 15,250 put option on 4th March contract around 200 to 205 on Thursday itself. So morning around 7:52 a.m. itself, asked to watch out this particular put option once if it is reaching 600 to 650 for the high risk traders. If the trader, whoever wants to exit, they want to keep stop loss more above 400 or something. That is the idea which given initially. So this is the call which we given on 25th itself. You can see the 25th itself around 11:20 we bought it this particular, and which we holded, and that is the reason we want to go for the target of 600 to 650, because of we know the level of 14,569 the target pending in hand, and it has a good day. And the hair strike, this is also one of the reason the market may started to fall down, so that is the reason I have given. And I have shown and indicated that the pending target, if it is, it means we may get huge profit. And these are all the levels, bullish and bearish, and I have pointed out that the bearish day has the chance 8:13 itself, because of the volatile level 2 came inside the positive. Normally if it is comes means there is an additional added advantage, the market may go down heavily, and bearish have the chances to go down heavily. That is what. And exactly I have pointed out that whoever wants to at 8:45 this particular, if the safe trade, if anyone wants to exit apart from 600 to 650, if they don't want to exit, they don't want to take risk, if anything goes above 400 they can trail the stop loss. That is the idea. So it has trailed the stop loss. It would have hit around because after reaching 490 it has reversed from that particular level, so they would have exited with 450 minimum. So still they made money, some 18,000 profit in that particular call. And the fresh call, which I specifically don't want to enter into this kind of market, so but still we entered a fresh call for small levels. After 490 it has went, and then it has started to reverse a bit, and they would have booked a profit somewhere on 18,700. If they exited somewhere around 450 to 460, stop loss, trail stop loss, because it has gone down from 490 to 385 or something. So that time it would have gone it the stop loss, trailing stop loss. And but still I asked to buy because of people are asking to buy, so I ask this particular both levels at 11 piece each. So one particular option has started to move almost 49 59, sorry, 59, and it has gone up while taking. It was at 35. Still the call is not moved much, but some people would have gone exit. And the stop loss that particular target, we after our old target of 14,569 got it, we got one more target which is 14,499, that is also got it. And then this is the next lowest target which is opened, 14,350.03. And let's go to the prediction for Monday. Monday indications are showing positive side, but the absolute frequency is evenly poised. Why? Because it is a fresh day of the month, first of March. So we may not know what is the frequency on that particular month. So then only after the first day only we will get to know. So but as per the data, it is showing kind of a positive. But whenever we get these kind of evenly poised, it shows all three results are possible, so you must have to keep both options in hand, then only we can able to make some profit, otherwise it's not going to be easy. These are all the support and resistance levels, so note down this. If the matching on the high and low, you can trade accordingly. And the par value indicates that anything pre-market opens below the par value, it open up the negative target 1, negative target 2, and negative target 3. If the market is anything opens above this 14,684.48, then the market may open up the target of positive target 1 and positive target 2 and positive target 3. But here the difference is the positive side having the much bigger higher points than comparing with the negative, but still all three results are possible, so you must have to keep both options in hand, then otherwise it is not going to be easy. It is not going to be that much easy, but according to your luck, if you're going for a one side. So I always ask my clients to go for a both side options. So the extreme bullish market, pre-open, anything open above this level means this is the stop loss for extreme bullish market. Normal bullish market, if anything opens even 1 point in the positive, then this is stop loss for the bullish market. If it is breaks down, this stop loss might change the closing. It might go bearish as well. On the other hand, if the market, if the market is opens anything below this level 14,550.94, then the extreme bearish stop loss is 14,591.45. If anything opens even 1 point in the negative, then this is the bearish market stop loss 14,572.57. If anything opens in between the volatile level, anything opens in between volatile level, according to which side it is going to break, the volatile level 1 or volatile level 2, according to that these above stop loss will get automatically activated, which side it is breaking according to that. And if for example this is the level which for the positive average or the bullish level or bullish open target level, these levels are not able to break, the market will chances to fall down. Likewise the same, if the negative side targets are not able to break, then the market having chances to recover from the low of the bearish open target or the negative average side. Anything gone past beyond that, as we saw on Friday, it will not able to recover, then it will go for the downside. And the same kind of a pattern also appeared in the Monday, because the hint which bearish is still possible, the volatile level 2 came inside the positive, so that is the one hint which gives it might go once again on the negative direction, but we can't go one particular this indication with put option. Why? Because it has a good chance to go in the positive direction too, because of the absolute frequency is evenly poised. So you must have to keep both options in hand. This is the only hint. It is not the final result. It is the hint that you need to keep put option as well. So very simple. You must have to keep both options in hand whenever the absolute frequency is on the both sides. And these are all the feb sheet, our profit and loss sheet. So these are all the result which we ended up. The risk trade is nothing but you are buying and holding for the F&O or the maximum target. What are the target given up to that level? So you need to wait. So these are all the result. We ended up with 47,600 profit, and the safe trade, which is the same kind of levels only will buy, but the calls will be given to exit on the safer after the profit reached. So here only three negative results, so we still ended up with 30,000 rupees profit. Let's see how the market is going to give us on Monday. It is very clear you need to keep both options in hand. Let's see how the market is going to give us on Monday. Thank you.